everyone. FinanceFeeds is here in sunny Limassol, Cyprus. We're at the iFX EXPO 2025. I'm continuing my discussion with executives from the prop trading space, and today I'm joined by Justin Hertzberg, who is CEO of FPFX Tech and PropAccount. Justin, it's great to see you again and to catch up.
Likewise, it's always a pleasure, and thanks for taking the time to speak with me.
Absolutely, always a pleasure. We've got a lot of stuff to cover. I gotta read the questions from the notes because there's a lot of content here. So following regulatory and commercial pressures on MetaTrader platforms, as we all know, many brokers and prop firms have been forced to look for new solutions. I think this is something that's been transpiring over the last maybe year and a half or so. And this shift has obviously created demand for sort of broker-neutral architecture or infrastructure that allows more control and, let's say, fewer restrictions. And it seems like FPFX has moved very quickly to kind of fill this gap for industry participants. I wanted to ask, how have you adapted your product strategy to meet demand from these firms transitioning away from, let's say, MetaTrader, and what have been the most difficult challenges in offering, let's say, viable alternative from a technology perspective?
Yeah, it's a great question. It's been a reality of ours for the last year and a half. But basically, when we built our technology, one of the things that was really important to us was we didn't want to have a single source of failure. And so you look at all of the different integrations that you have and all the dependencies that you have as part of delivering a prop tech solution. And one of those is your trading platform provider. Yep. And so if you only worked with MetaTrader or MetaQuotes for MT4, MT5, and something with that relationship went sideways, how are you actually engaging and delivering with your customer? And so we had the foresight to build the tech to incorporate more than one platform. And I would say maybe more lucky than good, we had actually started that process long before MetaQuotes changed its policies and warmth towards the prop industry. And so we had already started doing integration work with DXTrade and CTrader and MatchTrader and others in advance of this. And so when firms had to pivot, we were actually in a very good position to facilitate all of that for them and add those platforms in. And we continued to do that as the decisions by MetaQuotes, as well as the sophistication and maturity of traders and the exposure of those traders to other platforms has grown. We're seeing more demand for newer trading platforms. And so we've continued to integrate. I think we've integrated over 12 different platforms into our tech across FX CFDs, futures, crypto platforms, and continuing to expand based on what we believe to be the next big thing in terms of platform, as well as taking user feedback and delivering what they ultimately want.
I wonder how much of a role does the mobile version of, let's say, the trading platform for prop firms is that top of mind really? Because again, when I think of prop firms and I think of traders who are interested in sort of trading in a prop ecosystem, I'm thinking that they're young, they're very agile, they're used to smartphones and stuff like that. Is the mobile app development and usability of mobile apps in the prop trading space a big thing?
Mobile app for a prop firm isn't as critical as mobile app for the platforms that prop firm supports.
Correct.
And it is critical. It is probably as important as anything else you can deliver to the user experience these days. 5 years ago when we started, mobile trading was maybe 20% of all volume. Now it's probably upwards of 65, 70%, maybe higher depending on certain firms with demographics towards the younger generation of traders. And so it's critical to not only have mobile app availability, but it's also the mobile app experience that matters. And if you're not delivering to the trader a platform that has the user experience that they covet, you're going to find a lot of resistance there.
Great. So I wanted to talk a little bit about your geos or geographies. You made a decision to open a European office here locally in Cyprus, and I think that signals a more prominent presence for FPFX to be near for brokerage hubs, right, where a lot of brokers and other industry players are kind of located. You've mentioned that the operation will provide on-the-ground support and consultation to brokers looking to develop and expand their prop trading operations. I wanted to ask, is the European brokerage industry sort of ripe for the taking? We've always talked about retail and institutional, but this is a completely different space that's evolved over the last few years. Obviously, in different regions, there's different things maybe going on in terms of demand and supply, let's say, of technologies and demand for prop trading services. Do you think that Europe in general will be friendly, let's say, from a regulatory standpoint, because regs will, I think, ultimately take shape in here and in other regions? And what's driving the shift, do you think, from traditional brokerage to prop models among your broker clients? What are their, let's say, most painful operational pain points, the biggest ones that you sort of see today? I know it's a
big question, a lot to unpack there. So let me take it element by element to the best that I can.
Yes.
So first and foremost, we opened our Cyprus office at the beginning of 2025. Obviously, this has been a major hub for financial markets and retail trading for probably a decade or more at this point. And this is where the firms are. And I've been a long believer that brokerage firms will ultimately make the best prop firms because the industry will get regulated. These are firms that already understand how to operate in a regulated sphere. They cater to a global audience. They have their own infrastructure in terms of platforms and liquidity, marketing teams, compliance teams. They have built-in networks of IBs and affiliates. They've got databases of dead, dormant, and demo leads that they can remarket to. And so they have a lot of the core infrastructure that will help them to be successful as a prop firm. And part of what drives that is also that there's a much lower cost of client acquisition to acquire a prop client as opposed to a self-funded brokerage client. Additionally, you have the ability to upsell and cross-sell them creatively inside from the prop environment to the brokerage environment. And I think more importantly, going into your second question there is, why should brokerage firms, even look at the prop space? And that's because the demographic of prop traders is largely overlapped with the demographics of self-funded brokerage traders, except it's skewed younger.
Yeah.
So if you're a brokerage firm and you want to prepare for the future, you have to attract the youngest generation of traders. And if they're more interested, or at least somewhat interested in prop trading, and you're not offering prop trading, this is a way to get in front of that audience and cultivate that relationship earlier in the process and get them before they become enamored with some other financial asset that you don't currently offer. And so I think that's a very important thing. And from the brokerage perspective, a couple of years back, so when we started, talking about this a bit more regularly, prop trading was sort of like an annoyance to brokerage firms. It would be like, like a mosquito by your ear.
Sure.
You're trying to shoo it away.
They probably felt some kind, there's some pressure competition going on.
But
right?
It wasn't a big deal. But now I think a lot of brokers are feeling the erosion of market share to prop firms. And so they can hem or stem that erosion by incorporating prop, but they can run it effectively and turn it into a real standalone value proposition as well. In terms of regulation, I do think it is coming. I would normally say that regulation would start in the U.S. and then filter out through the rest of the world. I don't think that's probably going to happen with the U.S. administration we have currently, so I expect it will start somewhere else, Europe being the most likely port of call for that. And I welcome it. I think it's a great thing for the industry. I think it will actually establish trust. It will eliminate a lot of the counterparty risks that exist between the end trader and the prop firm operator, who oftentimes defaults because they don't really understand risk the way that a brokerage firm would. So I think long-term, it's a great thing. Obviously, with regulation comes additional operating costs and headaches and all of the stuff that goes along with that. But long-term, it's a great thing. Europe has been a tough market, though, over the last, say, 8 or 9 years in terms of new regulation between FCA and ESMA. But again, I think that this is an industry that isn't going to go away. I think regulation will ultimately help it. I hope and continue to volunteer to be a part of any of those sandbox discussions with the regulators to actually come up with sensible regulation that really address the core concerns underlying prop trading.
It's interesting that you mentioned, a couple of years ago, maybe retail brokers felt some heat and the kind of erosion of market share. It seems to me that the evolution of the prop space today is basically having a brokerage arm and having a prop arm. So we see companies that traditionally started out as prop firms are now acquiring actually very large international retail brands that we all know, right? And then on the flip side, we have large international retail brands, starting to launch their own prop, or some of them call them funded trader programs. And to me, it seems like in terms of the evolution of regulatory regimes, that might be kind of the solution, because again, the brokerage side is already regulated, right? And so you can probably take some of the learnings that we have from traditional retail and apply it to prop. It could be anything from the things like counterparty risks and all that, all the way through marketing and illegal and all these sort of standards that everybody's used to in Europe and US and other regions. Kind of wanted to know if you agree with me on that.
Completely agree. I don't think you need to reinvent the wheel at all. I think when you look at sensible regulation for prop firms, you're looking at a lot of the same things that you would look at when regulating a brokerage firm. It's what kind of net capital do you have?
Yep.
You have your truth in your promotional materials, that everything has to be defensible. There's got to be transparency of your financial position. You have to have some disclosures to traders to let them know how successful or unsuccessful traders are going through these programs. It's common sense approaches to building trust and building accountability. And I think those are good things. And again, they've been done before in the brokerage context. We just need to adapt it to the way that a prop firm operates. And I'm hoping and hopeful that some of the brokers that have already entered the space will actually try to leverage their healthy relationships with regulators to say, hey, look, let's bring this all under one tent, because it's a very similar value proposition. It's just sort of a different angle and approach to engaging with the customer, but we want to protect the customer. We want to do it the right way. We want to have your blessing. Let's work through what those regulations should be.
Absolutely. If we dive a little deeper into the technology that FPFX Tech provides, you have what's called a prop trading tech kit. I think this is like bundles everything all in one: back office, trading platforms, access to liquidity, KYC, analytics, all of these different things. Which components of this tech kit have proven to be the most valuable for your clients? And are there areas where demand has sort of like surprised you? I know we spoke a little bit about mobile, the usability of the mobile trading platform offering. Perhaps there's other things that have kind of come to light in terms of when potential customers or existing customers come to you, they're like, we need to focus specifically on this, or we have an issue or a challenge internally that we want to solve together with you, and we need your help.
Yeah, and I think the answer to that question will probably change every 6 months that you ask it to me, because the industry continues to evolve in some very interesting ways. So when we first launched the prop kit, which is end-to-end automation for the entire prop trading operation and administration process, the biggest thing we had to tackle was the ability to create these customized prop plans, the way that you wanted to actually qualify your trader through the challenges and the conditions and metrics, and being able to deliver that type of customized solution was paramount at the beginning. What we have found, as the industry grew in terms of popularity and awareness, it was really the ability to scale. And the only way to meaningfully scale was to automate that customer journey as much as possible.
Okay.
And so that was everything from the onboarding to the delivery of the trading accounts and the trader dashboard access, and KYC and trader agreements and payout processes and so on. And so a lot more focus, let's say, over the last 18 months has been centered around just delivering a self-help environment to the trader so that they never have to interact with a human being on the back end of the prop firm. They can just take their own journey all the way through, no interruptions, and have it be seamless and effective and meet their expectations. But the most interesting development really, or developments I would say over the last, say, 6 months are, there's a growing demand from both the prop firm operator as well as the prop firm user to have a multi-asset solution.
Yep.
So, what started largely as FX and CFDs has quickly morphed into now you need to be able to offer on-exchange futures and on-exchange crypto. And so we've been deploying a lot of resources, and really have over the last 18 months in advance of this, as we saw the trends happening, to be able to deliver a multi-asset solution. So now you can offer challenges across multiple assets, across multiple types of platforms, and ultimately deliver the user experience and the market access the trader wants. From the operator side, one of the interesting things, and one that we felt we were early on, was it's really a risk management play. This whole industry is not about the sales and marketing of your challenge. Is it one step, two step instant hunting? Is it futures? Is it FX? It's risk management. Yeah. And you have to have an intimate knowledge of what your risks are, what your exposure is at any point in time. And we've been spending the last 3 years delivering and developing tools to help prop firms really understand and quantify and manage those risks on a real-time basis. But only in the last, say, 6 months or so, with the rise of a lot of toxic trading and coordinated groups and people trying to gain the outcomes, are the prop firm operators themselves finally appreciating how critically important this is to the sustainability of your firm. And so, we're happy to be well positioned for that, and our firms get to engage directly with our risk team about all things risk, whether it's the structuring of their plans, the ongoing monitoring, hedging solutions, different aspects of what they can do to constantly tweak their program and just remain competitive, but also remain sustainable and successful. And that's really, I think, going to be the long-term trend, is the continuing evolution and emphasis on risk management.
At the end of the day, in our industry, that's where the revenue comes from, unless you're a SaaS provider or something like that, right? I mean, but if you're a brokerage or a prop firm, revenue usually is generated through, the actual trading, so to say. What I wanted to say is, Trump's tariff announcements, obviously we all saw what happened in the markets, and speaking to other executives in your niche space, I mean, they told me, the retail and institutional side, a lot of people got caught off guard. Same thing happened with some prop firms as well. And it seems like risk management for the next 3 years, I think risk management is top of mind for everybody, because this person comes out in terms of, let's say, fundamentals. He comes out, he says something, the markets start moving, right? Follow-up question on the technology. In April, FPFX integrated with Liquidity trading. Andrew Lane is a great friend of FinanceFeeds that has, I would say, very good solutions. What do you think of the mainstream adoption of AI trading signals? And again, how is that sort of important for the user experience for these younger generations of traders?
I think the implementation of AI-generated signals, as well as market analysis, is going to make the average retail trader able to consume critical information much easier, much faster, because the average retail trader is largely uninformed, and they're just really relying on technical analysis, but they don't have a good understanding of the fundamentals that are driving the markets. They don't have a view of, the macro drivers in any given day or week that are, really moving markets. And so firms like Acuity are doing phenomenal things with really innovative technology, and their solutions that are built to be incorporated into other technology solutions. So, we spent a couple months working with them and their dev team to incorporate all of the Acuity software into our trader dashboard environment. So end traders of prop firms can have access to real-time market analysis, trade ideas, different types of quantitative reviews and approaches. And I hope they take advantage of it, and I hope they leverage what is made, available to them. But ultimately, I think that, in general, the way we consume data is going to be largely driven by AI. And as long as it's reliable AI that is, consuming from the right sources, it synthesizes information way faster than we could put it together on our own. So it's going to be a time saver, and you're going to get to the heart of the matter that you're trying to research much faster, which I think is, stuff that we're all pursuing.
Yep, absolutely. So you mentioned a little bit about, over the last 6 months, there's, let's say, I wouldn't call them predatory clients, but let's say coordinated actions by different traders trying to take advantage of what I would call challenge-based prop firms, right? Prop firms that offer different types of challenges to traders to get to the next level, right? In terms of their offerings. You mentioned you've built systems at FPFX to basically kind of identify this type of behavior, let's call it malicious behavior, early on, using both trade behavior analytics and, let's say, also real-time monitoring. In your experience, let's say over the last 6 months or longer, what are the most common types of exploitative behavior that you've seen? And how do your systems handle what I would call, let's say, false positives, or identifying false positives versus real threats, and kind of making that differentiation? As, again, the markets, there's a lot of volatility in the markets. Prices are moving very quickly, right? So it seems like the firms need to take action against these types of behaviors quickly.
Yeah, it's a great question, and it starts with the premise that many prop firms themselves are fundamentally flawed in the way that they've actually set up their challenges, where they are susceptible to statistical arbitrage. If I knew that I could flip a coin 100 times and it would be heads 55 out of 100, well, I know where I'm going to place my bets because there's actually an edge in my favor. And some people have figured out that there are prop firms operating today that have a flaw in their structure that allows them to flip that coin enough times and ultimately make money because they know it's going to end up on heads more often than not. And so the first, stop for us is to make sure that your prop challenges are not susceptible to that type of arbitrage. But the types of challenges that we see stem from, toxic trading in the form of latency arbitrage. So they try to take advantage of, latent pricing because it does exist in a simulated environment often. So sometimes, brokers and LPs don't maintain their simulated market data in the same way that they do their live data. And so it leads to different types of, arbitrage that people can abuse, whether it's the quality of the execution or the price of the execution that has to be carefully monitored. So we do watch for that. We do see a lot of statistical arbitrage, and this can take many forms. It could be traders trading multiple accounts. It could be traders trading across prop firms. It could be traders trading a prop account with a self-funded brokerage account. It could be traders trading in concert with one another. Sure. We also see a lot of gamified trading in the form of over leveraging or niche trading, where they're just trying to get through the challenge as quickly as they can because they've identified that, hey, it's like flipping a coin. Yeah, time is money, and the sooner I can get through this, the better. And so we're looking at all of those things. We're flagging those things. We're identifying them to the firms that we work with. We're trying to give them recommendations based on what we're seeing, so that they can make an informed decision. But to your question about false positives, it's as much art as it is science. You have to draw a line somewhere. Our recommendation is always to err on the side of caution in the sense that unless we definitively know something is a violation of terms of service, the recommendation is, hey, let it through, monitor it carefully. If we have, additional confirmation down the road, then you can take maybe more definitive action. But, the goal is not to treat everyone as a criminal. The goal is to treat, a trader like a customer. You want to embrace them and foster them. And unless you know definitively that they're there to take advantage of you, try to work with that and build in enough flexibility and margin into your business to accommodate for that.
I'm wondering, do you guys use AI tools specifically for these purposes? Because it seems like so much market data, so much information. Something that kind of does the analysis quickly. And then
we've developed some machine learning techniques, and so we built the original framework, and then we layered machine learning on top of it. To basically continue to learn and continually consume the data that's coming in, and identify with greater certainty the types of behaviors that would warrant flagging and further analysis. And
last question is specifically about the recent situation that you had with a company called Funded Engineer. You secured a default judgment in Florida against them. That case revolved around alleged misuse of your proprietary systems, non-payment, and a broader claim of, let's say, deliberate software misappropriation. It's really one of the first legal developments that kind of was in a public setting with respect to a company providing trading technology and, a client of yours, right? Being a prop firm. I'm wondering, do you think that this case and this situation sets a certain precedent with respect to, let's say, IP, intellectual property, commercial rights, and things like that for this segment of the industry in terms of prop? Because there's so many companies out there that offer prop trading, right? You have a toolkit that I can buy from you, and I could set up a prop firm tomorrow, right? There's other companies that are using other technology or using their own from the traditional brokerage side and then adapting it to prop. How do you see that evolving, if in any way? And do you think the possible regulatory regimes that we might see could protect firms like FPFX Tech, against these types of situations?
Good question. I think, it's unfortunate when we have to resort to litigation at all, and it's not our objective. In this particular case, we were very happy to prevail and be validated in our claims of position, and we hope to enforce the judgment ultimately and collect the money that we're owed. I don't know if it sets a precedent for the industry. I think it certainly does in terms of firms that want to work with us, that we will enforce our rights under our agreements and protect our intellectual property as well as our commercial rights, which is important because we want to deal with credible people and we want serious people on the other side of the table from us that we work with. I don't know if it's the type of situation that regulation will directly address. I think indirectly it addresses it because the barriers to entry will become steeper. And so you're dealing with professionals as opposed to non-professionals. And again, that's why, part and parcel to why we feel so strongly that regulation is a good thing. We want to raise the barrier to entry. We want to have well-capitalized, experienced, worldly professionals engaged in this space, because it is a financial service, and it's a serious business with serious risks, and you need people that have the wherewithal to understand what those are. And so those barriers to entry, those gates that you have to go through, it's a good thing. It probably eliminates some of our lawyer bills, which would be fantastic.
Yes, those rack up quickly, don't they?
They do, and they're never pleasant.
Yeah,
I'm certainly hopeful that with the maturation of the industry, with regulation, it'll be much more professional, much the way it is, here in Cyprus with the brokers, where you really have such low incidence these days of broker defaults happening, and even major regulatory violations by brokers. That are down so much.
It is
because the regulation has matured and it's caught up with the way that businesses actually operate.
Yep.
And I'd love to see the same thing happen in prop.
Yeah. Hopefully. We all hope so.
Yes.
Well, Justin, thanks for taking the time to speak with us. Always a pleasure catching up with you. Hopefully we'll do a podcast or something elsewhere in some other region of the world, in a studio of some sort. So thanks again, and good luck the rest of the way here in Cyprus.
Thanks. Always a pleasure. Thank you for the opportunity.
Yeah.
And appreciate it. And hope it was well received.
Absolutely. Thank you.